Hello traders, this is Tradox weekly video recorded on June the 23rd, and this is the charts of the futures of the indices that I usually follow, and those are the S&P, NASDAQ, Russell and the German DAX. So again, the topic that is driving the market is US-China trade deal. Obviously now we have again additional sanctions to Iran, US-Iran relationships, oil and gold that are going up, and we have also the 100% chance of the rate cuts in July by Fed. The most important meetings on the next week are going to be G20 meetings that are starting on Friday and OPEC meetings that are starting on Tuesday. All of that is coming after Draghi announced stimulus, and we got the dovish Fed on the FOMC statement and FOMC press conference. Now let's go on the charts and see what kind of technical picture we can get on them. This is the daily chart of the S&P futures, and on Friday we got a marginal new all-time high. It is going to be seen better on the lower time frames. NASDAQ is still between the all-time high and the previous all-time high, and the Russell still lagging behind, now above the daily 50 and the daily 200, but still showing a great bit of relative weakness and lagging behind the S&P. What is interesting here when we observe the 4-hour charts is that we have a clearly visible bearish divergence on the S&P, and we shall see about other indices later. Just know that this is something that is one piece of the puzzle. It is of course interesting to see that here when market is struggling to make new all-time highs, but just note that that same thing was here also. You can see that clearly, that here was bearish divergence, but market still moved higher. So that is just one piece of the puzzle, and the market that is in the strong trend will usually show you at some period of time bearish divergence. It could be a sign of a pullback, but here we should be really more cautious here and just be open for any kind of scenario. Like said in the previous weekly video, what we had on the S&P, was here a bullish pennant above the daily 50, and the greater odd scenario was market moving higher into this area of 2,950. That is what happened, and now again we have two scenarios. One is additional breakout above here, making new all-time highs and going to test this trend line, and that would be around 3,030 area. So first to the 3,000 to test that round number, and then to go to the 3,030. That is one scenario. Another scenario, of course, is this is a double top and rolling over again for start to the 50. And let's see now NASDAQ on 240-minute chart. Again we can see the same thing, bearish divergence, and we had that. So this is, for example, this is the here Russell had bearish divergence here, but after that bearish divergence we got just a pullback with the higher low, and again moving to the upside. Also it is good thing for us to observe cash charts. So always look on the cash charts. The cash charts are the best for seeing gaps on the cash indices, which carry much more weight than gaps on the futures. And we can obviously see here those gaps on the S&P and on the NASDAQ as well. And Russell is really the only one which really likes to fill these gaps immediately, and you cannot really see here much of the gaps in Russell. Maybe here one or two, but not as many as on NASDAQ and on the S&P. And what we got on Friday, let's go now to the 1-hour chart. What we got on Friday was basically a false break above this new all-time high, that was made on Thursday, and now price is below that new all-time high and below the previous all-time high made in May, and they closed basically at the bottom. But again, market is going there. They try to make a breakout from the position of higher lows, and this is very important. Is this sequence of the higher lows is going to remain or not? And first warning sign would be market breaking down below this range. If we observe that on NASDAQ, again we have series of higher lows, but we also have this rising wedge, for example on NASDAQ. And on Russell, you could make yourself a rising channel like that, and this here, this support, now could be very important if market breaks this channel. Is it going to hold here, or is it going to move lower? So that is about the US indices. Obvious scenarios are here, moving higher or rolling over. Also, what we got for now here, let's go back to this 1 hour chart, is here a presence of serious sellers that didn't really allow S&P to go higher. But this was also on quadruple witching day on Friday, and as said before, as long as you have this sequence of higher lows, breaking higher should be a higher odd scenario. Just be ready for the rollover. Just don't break your head too much about this. Is it, risk on or risk off? Just follow the price. If you are a short-term trader, you should follow the price. Now let's go to the German DAX. Okay, this is DAX futures daily chart, and DAX is now here for 2 days struggling to go above this area of resistance here. And what is interesting here on this chart is all-time high was made here in January 2018, and it was a false break above this previous all-time high. Market made a double top here. After that we got a good swing to the downside, good swing to the upside, again double top that are lower from this, good swing to the downside, good swing to the upside, again we have double top that is again lower of this, of course. So this obviously here is a very important inflection point for DAX, and at lower time frames you could observe these inflection points better. On a 4 hour chart we can see this struggle here, and this move to the downside was started by, it was a gap down Sunday on Monday when US President Trump was speaking something in his tweets about additional tariffs, and there was a gap down on all markets. Now we are here again, and the DAX, unlike the S&P, does not have a bearish divergence here, and the inflection points for DAX are here, top of this around 460, and here, because this was Draghi induced move that started before Draghi's speech. There was a false breakdown, then we had a trend up day. So breaking above this range was never retested, and that could be the scenario. If market could go higher, they first could retest this lower range here, and this edge that comes around 12,220, 200, to test this, and then from the position of the higher low again attack this same resistance zone and make a break, and that break could lead at least to the 12,600 for start. Going below this yellow line, which represents the inflection point, could again lead to the test of round number 12K, and then this old Draghi stimulus move could be in danger for being negated, because below this it is a path again to the 11,600. Let's go to the DAX cash index on the hourly chart. Observe this range is better, so now we are in this range for 3 days. This is a multiple day range, and that could be a projected move, retesting of this and then going higher, maybe to this second resistance, which is around 12,600. Alternative scenario, of course, is rolling down. As said here, this could be this is a potential double top here. So for us, it is best to follow the price, not to break our heads about all of these headlines. That was the scenarios. Again, on the S&P as a leading US index and on the DAX, again, as always, we will have two scenarios, one that is higher odds scenario and one that is lower odds scenario. And as short-term traders, no matter are we day traders or swing traders, we got to be ready to take the trades in the direction of the market. That is it for this edition of Tradox weekly videos. I wish you a good weekend and good trading.